Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be looking at the 10th Commitments of Traders Report of 2021. And as we always do, we shall start off by looking at the largest changes in commercials positions. If you're new to COT analysis, then let me show you something. Here at COTBase.com, we offer a lot of educational material in written format and video format. We also have this resources page which will give you some very useful books, links, that you might want to read if you want to get into the COT analysis. Here at the help page, you can find some very useful tutorial videos for you to really learn about this report. Back to the review, and starting off with the first market, which is the Japanese yen. You can see it's on top of our list with a 22% change in commercials positions. Oh, and by the way, if you are new to this channel, please subscribe and hit that bell icon so you get reports whenever we update or upload a new video. Okay, so starting off with the Japanese yen, here we have that 22% change on the chart. It's visible over there, larger than average, but caution is advised. We saw last week we had a bullish COT change signal, didn't really affect the market, so it kind of halted that decline. If you see that, it's a question whether or not this change is going to shift the trend, or at least could we see a little bit of strengthening early next week. But if we move on to the 5-year chart, let me just show you something. So don't forget that we were actually at a significant bearish extreme not that long ago. So early this year, you can see I'm showing to you on the chart that vertical line over there. That's actually a quite big extreme in the market. So traders, commercials were heavily net short, large speculators heavily net long. And you can go back in time, even on this 5-year chart, you can see an example when traders were at such extreme levels. That coincided with that top in the market. So we're not surprised to see that weakness going on right now. Is it over? Is this a bullish extreme that we should start viewing as a change in the trend? Well, it's definitely not at those extremes. The most significant bullish extreme from 2017 over here. There's another example from 2017, another good example just around that bottom. So there's plenty of space left for traders to reach those levels. And of course, small speculators are also showing some positive signs. So the fact that they're net short at this level suggests we may see a bounce in the market. We'll see about that. Let's move on and have a look at the metal this time, Palladium market, where we have a 14% change in commercials positions. And on this 1-year chart, you can see that size over there. Now, it's larger than average, but I wouldn't consider this to be huge or anything that I would act upon. So let's just move over to the 5-year chart. And here you can see, maybe not that easily, but we are actually still closer to bullish extreme levels. So that's interesting, watching the market rise and still having traders at those levels. So you can see the opposite side, a bearish extreme from 2018, and that was basically at that top. It's hard to see on this chart, but actually from there we had a quite long decline, and we're not at those levels, that's for sure. So bullish extreme in the market, suggesting further strengthening can easily happen over here. Crude oil, a 14% change, the same change size, but a opposite direction signal. So over there, you can see that on the chart. It's very hard to see the magnitude. It's definitely larger than average, suggesting some weakness early next week. And that's coming after a strong Thursday and Friday. And from the extremes perspective, it is becoming bearish. So you can see that on this 5-year chart, we are getting closer, slowly, but steadily, we're getting closer to those bearish extreme levels. So we're not there yet. I would not be surprised to see further strengthening in this market before we reach a top. We'll see about that. The extreme analysis tells us that this could go on for some time. Moving on to large speculators, COT Extreme, we've got a wheat market, the Minneapolis wheat to be specific, on top of our list with a 352 report extreme, and you can see that on the chart over there. Also, commercials are at an extreme, and you know, it's quite obvious, clear to the eye, that this is a bearish extreme. We have had a bearish extreme not that long ago, pushed the market a bit lower, but eventually it actually surpassed that level. But as it did, we could see traders switching their positions accordingly. Large speculators at a very significant net long position. And let's go back over here, 2017. You can see that just before that top happened, traders were at a bearish extreme, not as large as the one we have right now, but it was a bearish extreme, no question about that. Okay, another currency, New Zealand dollar with 149 report extreme in large speculators positions. You can see it over there. Once again, we're talking about a bearish extreme, but if you look back on this 5 years chart, we should not be surprised to see this continue. And you know, just by looking at the dynamics of how traders are adding on to their positions, this could go on for some time, meaning we could see the New Zealand dollar further strengthening. Nevertheless, it's a stress level suggesting in the medium to long run, we should expect some sort of shift in this rally that we've been experiencing for some time now in the New Zealand dollar. Crude oil, we talked about. Energy complex, it's something for our subscribers. Lean hogs will be the last market, closing off this review with a 92 report extreme in large speculators positions. And basically, we just have to go back over here to April of 2019 to reach or see an example with a similar extreme size. And that was just at that top. So, you know, these extreme signals are, you know, something you should not act upon right away. Just the fact that you see it here, it's beautiful, doesn't mean that we're going to see the market suddenly drop next week. But it's definitely a way of measuring the stress level in the market, and it's building up to significant levels, suggesting traders are gonna reach a level where, you know, it cannot go further. So that's the picture that I can read in lean hogs. But you know, you can look at all the markets here at COT Base. I always show you just a few in these reviews. We have only a few market categories selected. You can actually analyze cryptocurrencies as well. We have all the report types that are available at CFTC. We've got the futures only data type, futures and options that we're looking at, but we've also constructed the options only data type, which is very, very unique. You can analyze all sorts of data sets. You can dig deeper in your analysis if you want. We've got a lot of tools. If you are interested in a specific market, let's say the euro, you just select it here in the left panel, and you can definitely dig deeper into analyzing that market, anything you're interested in all data formats, futures only, futures and options only. A lot of very, very useful tools, maybe a little bit sophisticated for some people, but it's definitely, like, you know, open interest. If you want to look at the open interest in euro, you have the option of, you know, looking at all three, the options, the futures open interest, futures and options open interest, and of course you can look at the open interest of options only data as well. So there's a lot to do, and of course you can select these and only look at one of them if you want to. So there's a bunch of stuff that you can do here at COT Base. We also have some very, very useful indicators. So if you trade using a platform, let's say the Ninja Trader, you can actually have our analysis over there, and you can definitely set it to your desire and the way you like to use it. We have a very, very cool new indicator that we launched last October, the ICOT Intraday indicator. I think something that is worth checking out. There's a cool webinar that we did back in October, and you can see the the indicator working in live. We also have some very good example charts for you. If you're somebody who's trading in a more shorter term, we constructed this indicator so that it sort of simulates what the COT charts show us, but of course it's not the commitments of traders data. There's a lot to read about it here. If you have any questions, of course, feel free to reach out to us and we'll definitely give you an answer. I appreciate your attention. Thank you very much for being with me in this weekly review. I hope to see you in my next review. Until then, take care. Goodbye.